The corporate bankruptcies in US increasing at the alarming rate. Bankruptcies are up to 16% in 2023. A new data from the S&P shows corporate bankruptcy is soaring, yet the US is not technically in a recession. Before the 2008 financial crisis, the US led the world in economic growth. It accounted for over one third of total global consumption growth. In mid 2007, US household wealth hit a peak of $61.4 trillion. The average home value appreciated 124% between 1997 to 2006. The real pain, of course, was felt after the 2008 collapse. US household wealth fell 11 trillion in 2009 and unemployment peaked at 11% in October of that same year. The most recent S&P data show 2023 corporate bankruptcies rising at an alarming rate. The data showing 236 bankruptcies were recorded through the end of April 2023. 109 had been recorded over the same time period last year. UBS also found in a recent study that bankruptcies worth $10 million or more had a rolling average of about 8 per week. The wave of bankruptcies comes as companies struggle to renegotiate burdensome debt loads accumulated during the era of ultra low interest rates. Companies from all sectors have been struggling with higher interest rate, making it more challenging for them to refinance loans and bonds coming due. In an environment of higher rates, companies are also facing more scrutiny from investors and creditors. In January, US corporate bankruptcies hit highest monthly level in nearly 2 years. US corporate bankruptcy filings crept up for the second month in a row in January. There were 53 bankruptcies filings in January, up from 50 in December. The monthly total is the highest since March 2021. The increased bankruptcy filings comes from a historically slow year in 2022 and ahead of a widely anticipated recession in 2023. Certain sectors like healthcare are seeing more signs of distress than others. While in February 2023, US corporate bankruptcy filing hit 12-year high in first 2 months of 2023, US corporate bankruptcies are rising in 2023 with the first 2 months of the year highest total for any comparable period since 2011. According to the S&P Global Market Intelligence data, companies filed 57 bankruptcies petition in February, while 54 were filed in January. February's total was the most in single month since March 2021. The high monthly bankruptcy counts in 2023 follow a historically slow year in 2022. Many bankers and analysts expect a downturn in the economy in 2023 that may prompt additional bankruptcy filings. S&P Global Ratings, meanwhile, expects an uptick in default for the lowest rated corporate borrowers in 2023 due to added stress from contracting corporate earnings, higher unemployment, and tighter monetary policy. Financial bankruptcy filings on the rise in 2023 as corporate bankruptcy filing in the financial sectors are on the upswing in 2023. SVP Financial Group's Chapter 11 bankruptcy filing March 17 marked the ninth corporate bankruptcy filing in the financial sector in 2023, the highest level since 2010 for the first 2.5 months of the year. According to the S&P Global Market Intelligence data, bankruptcy overall have escalated from low numbers in recent years as companies face higher borrowing costs amid a jump in interest rates and stubbornly high inflation. The overwhelming majority of bankruptcy filing in 2023 have come in the form of Chapter 11 filings structured towards reorganization. In March, US corporate bankruptcy filings pushed quarter one total to highest since 2010. US corporate bankruptcy filings spiked in March, pushing the first quarter tally to the highest level for the first 3 months of the year since 2010. According to the report, 71 corporate bankruptcy petitions in March, the fourth straight month of increasing and the highest monthly total since July 2020. The recent filings brought the year-to-date total 183 as March 31, more than any comparable period in the past 12 years. Moreover, April adds 50 more US corporate bankruptcies, 2023 filing highest since 2010. US corporate bankruptcy filing slowed in April from spike in March, though the tally of companies that have gone bankrupt so far in 2023 is higher than the first 4 months of any year since 2010. S&P Global Market Intelligence recorded 54 corporate bankruptcy petitions in April, a drop from 70 in March. Those fresh filings have pushed the year-to-date count to 236, more than double the comparable figure a year ago and higher than any of the prior 12 years. The reasons is relatively straightforward. The Federal Reserve interest rate hikes designed to rein inflation have laid bare the market's weak hands. A credit crunch is here, crippling companies with large cumbersome debt loads. Firms across every sector are struggling with higher interest costs, making it more challenging to refinance loans and bonds, while corporate executives are drawing more scrutiny from investors and creditors. It's worth noting that a bankruptcy filing is not necessarily a death knell for a company. Bankruptcies tend to wipe out stakeholders and give companies an opportunity to restructure their debt and come out the other sides with a healthier balance sheet. Still, an uptick in bankruptcy filing clearly demonstrates increasing economic stress.